We have never seen more capital drain from financial markets than we have in 2022, and some people are saying this is the worst sell-off we have ever seen since nearly every single asset, including bonds, stocks, commodities, and even crypto, is down at the same exact time. But in this video, I want to share with you what an ex-Goldman Sachs hedge fund manager, Raoul Paul, has to say about markets and why he believes that the bottom is actually very, very close to happening this month. So if you get value from this video, let me know in the comment section below. Give the like button a little tickle. And if you get consistent value from my channel, would really greatly appreciate your support. So let's go ahead and just dive into what he was saying. Number one, he just posted this Twitter thread a few days ago, and he gave some really in-depth charts, which I want to go over with you. So he believes that the bottom is actually going to happen this month in October, which we are already at October 17th today here. So he gives a bunch of different examples. So if we were to look at generational lows, the generational low of 1987 happened right in October, as you can see that low right there. Then we also had the same thing happen in 1929, where we had the big collapse that bottomed in November, and then that subsequently led to a depression later in 1932. In 08, same exact thing. We came down, had a really big sell-off in October, then bottomed very shortly after. 1974, same thing, sold off all the way into October and bottomed in October. 1997 with the Asian crisis, we bottomed in August going into October actually. Then in 1990, we also saw a bottom in the S&P 500 in October. Same thing with NKY in the 1990s with Japan. We saw the low in October. And then within Russia as well, in 1998, we saw the CRTX index have a low in October as well. So there are countless examples of the bottoming happening right around October time. And these aren't just like, oh, it had a little short bottom. These are really big sell-offs that were over 10% sell-offs that then had a generational low at specifically right around October timeframe. So we can also see that that's exactly where we're at right now. We're pretty much at we just had the low for 2022. We haven't had a lower point since COVID a few years earlier, and we'll see if this actually holds. But let's go ahead and see what he has to say with the rest of this thread right here. So first of all, like I was saying at the beginning of the video, this has been the biggest destruction of wealth in the history in dollar terms. So you can see that we've had the biggest sell-off in the history of the financial markets by having a ridiculous amount of wealth drained from financial markets. And the reason is because the typical portfolio, right? Typically when you're holding equities, everyone, all the financial advisors used to recommend a regular 60-40 portfolio, 60% equities, 40% bonds. The reason why you wanted that was for diversification, because when the stock market sold off, then bonds would typically go up. But this year, like I was saying earlier, we've had a great collapse where literally everything is sold off. Bonds, gold, stocks, crypto, literally everything has gone down except for the prices at the grocery store and the gas station. So you can see right here, we've had the regular 60-40 portfolio has gotten absolutely crushed. We've never had worse performance in a typical well-diversified portfolio. We also have extreme sentiment, which is typically right around where we bottom in the stock market as well. So less than 20% of people are bullish on the financial markets, which we are, approaching levels very close to 2008 and 1996 as well. So that usually, like I say in my other videos, whatever everyone else is thinking, especially retail investors, you typically want to do the exact opposite. So Warren Buffett says it for a reason: be greedy when others are fearful, and fearful when others are greedy. Unfortunately, this happens when baby boomers have a ton of their money in pensions and retirement accounts, and they don't have enough time to go work for another 50 years. But meanwhile, their portfolios are way down. So hopefully it doesn't affect too many people incorrectly. Now, he goes through a few different ways on what could potentially happen. So, the central bank has a few different options. It has reverse QT and rate hikes, and risk there being biggest fear of being Arthur Burns and not their hero Volcker. Unlikely to happen until growth utterly implodes. I agree. I don't think they're going to just reverse all of a sudden randomly. Stop QT and hikes very soon and go to data dependent. This is the easiest option and most likely path this year. Growth is still implodes as damage has been done, reversed in 2023. So like my previous video where I talked about what Chamath was mentioning about markets, remember the economy and the stock market are two separate things. The stock market gets priced in 9 to 12 months ahead of, in the future, right? So the stock market could bottom, and then 9 months later, the economy finally falls off the cliff, and we have unemployment at a new local high. So you got to realize that just because everything seems doom and gloom in the economy, that doesn't mean the same thing for financial markets, because financial markets are so forward thinking, they can price things in a year in advance. And then he says, the third option is they can keep going with tightening, which will force the politicians to fiscally stimulate as unemployment rises or if real wages remain negative. In my mind, the odds of a low coming in the next week or two are decently high. The SPX weekly hits next week near the bottom of the channel and the 50% retracement with record bearish sentiment. So he's pretty much saying, hey, I think there's going to be a bottom in the markets in the next 1 to 2 weeks. And I would say that I pretty much agree with him because number one, the Fed has openly said that, hey, we're going to raise another 125 basis points. So everyone is pricing in that the Fed is going to hike another 125 basis points here in the United States until the end of the year. And then next year, they're very likely to pivot because things are going to get really nasty. Now, let me show you some examples real quick, just in the charts. This is exactly where we're at. We've had this low right here on October 3rd, and I wouldn't be surprised if we see another little sell-off, depending on how earnings go, down to the bottom of this, which could be, another, 10 to 15% type of a sell-off if it happens quickly and swiftly like the other corrections have. Now, you'll see that this is exactly what '08 looked like. If we were to look into '08, we had a little the high of the market here. We had a little bit of a collapse. Then we had another big move upwards to the top of this resistance, sold off, had a slight little move upwards, and then came down and sold off really, really quickly into October. And that's pretty much it. This channel looks very, very similar to what this does right now, right? So I wouldn't be surprised if we have a little bit of a slump here and then we come a little bit lower. Again, that's speculation, but I think that is definitely more probable than us, just ripping higher right now and going to new all-time highs right now. Same thing with Bitcoin. If we were to look where we're at, the good news is this is the first bullish divergence we've had over the entire year in 2022, which we've had a 75% sell-off in Bitcoin alone this year, which we had the cycle low here at 17,800, and we've seen that we've sold off, and now we're consolidating into this zone, and we've been here since we had the low in June. So we've been trading here for like 4 months now, and you can see that we've had this bullish divergence where the strength of the market is actually picking up. You see how the RSI is having higher lows. We're also kind of still having slightly lower highs as well. So I would say this is more of a consolidation, not ultra bullish on the indicator side of things, if we were to just look at the strength of Bitcoin, but we are starting to see a creep up here. Now, what I would say is we are kind of nearing the end of this resistance zone and we're starting to peek our head above. But if we were to go look, let's try to find an example of when this has happened again, which, by the way, we're actually sitting at the highs right now. So I'm not surprised we're sitting right on resistance from what we had back in 2017. And if we do break this, really the only next resistance zone that I would be looking at is all the way at 14,000, really 13,900 is where I would be looking at next for Bitcoin to go. But if we were to look, pretty much the same exact thing with Bitcoin happened, right? We had a big sell-off. We had the consolidation zone. We had this, low right here, which was pretty much sideways, but we did have lower highs this all the way down. And then same thing with the RSI, right? We had higher lows. We had lower highs in the RSI. And then guess what happened? We then sold off from about 6,200. And I remember this exact day because I was standing on the end of a dock in Tampa, Florida, watching this happen. And because we were waiting on this consolidation for so long in 2018, and then finally we broke down and came about, another 40%, 45% lower and bottomed at 3,200. So it will be very interesting to see what happens. I think either way, we are at the breaking point. And I do want to end with one thing right here, which is, look, we're going into midterms. So a lot of the reasons why, and who knows, maybe this is a coincidence, but you can see the majority of the performance of the S&P 500 leading up to midterm elections was negative, okay? And then you can see the 3 months after, the vast majority of all the performance of the S&P 500 from the 1960s all the way to where we're at today was positive. Actually, we only had really 1, 2, 3, 4 negative 3-month periods after midterms. If we were to look at 6 months, everything was positive the entire time. So we've never had a negative performance 6 months after midterm elections. And same thing with 12 months. We've never had a negative return 12 months afterwards. So if you were to look at historical data, it is very bearish leading up to midterms. We typically bottom in October or November. And then what happens is you then see a pretty nice rally going into the next 6 to 12 months, because we've never seen in the history of us tracking this data all the way back to the 60s, we've never seen a negative period of 6 to 12 months after midterms. So in my personal opinion, I do pretty much agree with what, Raoul and pretty much Chamath said, like in my previous video. If you haven't gone and watched that, go ahead and watch that previous video. It's really valuable, showing an exact interview from Chamath, the billionaire investor. But in my personal opinion, I think it's very likely that kind of the same thing plays out as we see a bottom either this month or into next month, and then into next year, the Fed is forced to pivot because markets sold off. Everyone's kind of crapping their pants, and and unemployment starts to go down a little bit, and they realize, okay, the only way out is, hey, we start to lower rates and we start to print more money. And we're already seeing that with the Bank of England and even in Japan, and with the dominoes are starting to fall right here. So a lot of people get really worried over the markets going down, and rightfully so if you're not educated. But in my personal opinion, it's very wise to have still exposure to it. I know some people that went through the 2008 time period, and I will never forget hearing their stories when they had this really big capitulation event. Guess what they did? They sold all the way down here. So they sold their entire portfolios here, and then they sat in cash this entire run up. And guess what? They lost a significant amount of money, more like hundreds of thousands of dollars they lost, which was supposed to be like their retirement. They lost because they capitulated and got super fearful and started to sell everything at the bottom. So my personal opinion, the way that I'm setting myself up and the way that we're setting up our funds as well is we have a prudent cash position, and we just set to lower our average purchase price on assets that we believe in long term, and we still have exposure to the assets because maybe we're completely wrong and we've already bottomed, and the Fed pivots tomorrow, we turn on the money printer, bam, we still have exposure to it. So I never really believe it's good to go all the way in or all the way out of markets, because you just never know what's going to happen. But maybe you know what's going to happen. Let me know in the comment section below. Thanks so much for watching, and I'll see you here on this next video.